The market doesn't move randomly. It moves from liquidity to liquidity. And right before every big move, there is a trap, a fake, a deception. Most traders fall for it because they don't even see it coming. But a small group of traders, they wait for that trap to form. They don't chase the breakout. They wait for the failure of it. That failure has a name, a powerful concept used by smart money. It's called the breaker block. And once you understand this, you'll never look at charts the same way again. Watch this video till the very end, because one concept in this video can change everything. So in our first top-down example, we're going to be looking at that same GU trade on the 5-minute and showing the higher time frame context. But taking a look at this price action, what do you see? What I see here is we have a sweep here at the low, and then we have displacement up. Now, taking what we just learned in this video, what else do we see? We have a low, high, lower low, and then we create a higher high up here. So what are these up close candles right here? A breaker block. So now we have a breaker block overlapping with a fair value gap or a unicorn model on the hourly chart, and we just entered the London kill zone. Let's hop down to the 5-minute chart. Go down here on the 5-minute chart. Now there is a little bit more context to our first example. What do we see here? Well, we see a low, a high. We make a lower low into an important level. Let's see if we get displacement out. We do get displacement out, creating a higher high. So now we can mark out that breaker block. Now, what else do we have? We have the fair value gap here. So if I was worried about missing this trade or I really wanted to get in, I could look to take my entry at the start of that fair value gap, my stop at this low, and then I could either look to target 2R, which is right here, or these highs, or I can also project out that manipulation leg. So projecting that out, let's say I'm looking for a -2 standard deviations. Now we're at a 3.62R trade. So let's see how this works out. And there we hit our take profit. So you saw this example prior, but zooming back out to the hourly chart, now you can see the context of why I'd be looking for a trade here. We had a higher time frame PD array, and simply put, we're moving from internal liquidity to external liquidity on the hourly time frame. In this next example, we'll be taking a look at a unicorn model on the hourly time frame. So you can see here we have previous day low resting right here, which we created equal lows. So if this is not taken and we retrace back into this previous range, that is an opportunity to short. Now, what else do we notice? We see a swing high being ran right here. So we have a high, low, either high, lower low. So what are these down close candles? Those are a breaker block. The market knows out. What else do we have overlapped with them? A fair value gap. So if I did not even want to go to a lower time frame, I could look to take an entry right here. I stop on this high. I'm in looking to target equal lows. So let's see how that works out. And we would have gotten filled in right there. And there we would hit TP. In our last top-down example, we're starting on the ES 60-minute chart. And if you notice, we have a fair value gap that's been respecting here. And we have sell-side liquidity or self-stops resting here. We drop down on the hourly chart and we sweep that, close back inside. So let's drop down to the 5-minute chart to look for a long setup. So if you're on the 5-minute chart, what do we notice? We have a low, high, lower low. So let's see if we create a higher high. And there we create a higher high. So where is our breaker block? The series of up close candles here. We also have that aligned with a fair value gap here. So looking to take an entry at the fair value gap, might stop below the breaker and targeting 2R, it would look something like this. So let's see how this works out. But here we get filled. And there we get stopped out. You can see in this example, we swept sell-side liquidity after the open. We displaced through the breaker block. We created a unicorn model, took an entry, and then it stopped us out. Losses are inevitable in trading, and that is why I show this example. I hope you found this video beneficial. If you did, please consider liking and subscribing, and I'll see you guys next.